Rohr here with an early global view on Tuesday, December 9th, 2014. It's currently 6:45 a.m. U.S. Central Time, and a very interesting day with a lot of macro factors driving the further drop in equities, strength of fixed income, and we'll be getting to an interesting thought on that in a moment. And we have to ask, what does all this mean to the markets? Well, for right now, it means some extreme weakness on the U.S. S&P 500 hourly chart on the left, 30-minute on the right for our short-term view, and it is down to 2,036.5. In other words, back to where one of its recent rallies from a sell-off started. And to put this in context, we have to expand the hourly chart, and you'll see that's from the last sell-off low before the gap higher on the People's Bank of China rate cut back on November 21st. It also happens to put the market back into an area we were very keen to keep an eye on. That was the low of the sharp lower opening on some negative PMIs overseas for the S&P, and it had also tested it previously in the wake of the FOMC, and that was the 2040 to 2036 congestion the market had churned out on the way up into mid-November. So that becomes very important once again. If you should be breaking 2036, it's not just that the next support might be down here in the mid to low 20s, but that the bigger supports don't come in much closer to 2,000. And we also know